The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 23rd, magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I must master each and every day. So let's begin our day with an empowering thought, an empowering belief. You know, I love to inspire, mostly because I love to be inspired. In fact, let me pop this up on my screen here. There we go. Hopefully you are watching in on Tiger TV. If you are, you can see one of my favorite movies out there, Braveheart. And if you are just watching us on, or you're just listening on your mobile device or the radio at TFNN.mobi, don't forget this show will stream live to your smartphone device. You may have been one of the people, one of the 9 million or so that bought a new Apple phone. So go to the homepage at TFNN.com. On that phone, over on the upper right-hand side, you'll see a button with 3 little smartphone-type devices. Click on that. This show will stream live. Of course, the archive is on Channel 9. Now, I love to inspire because I love to be inspired. In fact, if you want to inspire someone, folks, make sure that you're inspiring them about something that you are inspired about. If you're going to touch someone, make sure that you've been touched. One of my favorite movie scenes comes from Braveheart out there, and you probably know the scene. It's a scene where William Wallace speaks to his army. And if he were here today, here is what I could picture him saying. He could be saying, or Steve-O could be saying, I see a whole army of men and women here to do good for themselves and others. Traders, investors, young and old, looking for answers to what the market is doing and why. Asking, should I be in? Should I be out? Is buy and hold the right strategy? Asking, how do I take on the market? Us against them. Who has the advantage? Is now the right time to take action? Maybe it's not the market, folks, that you have to overcome. Maybe it's some other fight that you are taking on in your life right now. Do you take it on or do you run from it? Yes. Running is easy, at least for a while, and dying in your beds many years from now. Would you be willing to trade all the days from this till that for one chance, just one chance, to come back to this crossroad in your life and tell your enemies from within or from without that, yes, we may fear them, but they cannot take away our decision to take massive action. Yes, I see a whole army of traders and investors here in defiance of prop desks, of quant traders, and the like. You have come to fight as free souls, and free souls you are. Will you do without financial freedom? Will you fight? Yes, fight and you may die. Run and you will live as you are, and again, dying in your bed many years from now. Would you be willing to trade all the days from this day till that for one chance, just one chance, to come back here and tell your enemies that they may take some of your money, but they will not take your financial freedom? And lastly, folks, I ask you this. No matter what hurdle you must overcome in life, if you knew that everything was going to turn out okay, how would you live your life differently today? What defining decision could you make right now out there? You know, I know a decision. This Friday, September 27th, I'll be hosting a Master Trader course where I teach you the tools that I use to trade the markets each day. I'm going to compress decades into hours. I do that, folks, by linking the known to the unknown out there. I'll be teaching you how to buy and sell the D point. I'll be teaching you about the different reversal patterns, the ones that you need to be paying attention to out there. I'll be teaching you other trading strategies that have a positive expectancy and outcome. And that's the real key. I spent time with folks over a couple folks over the weekend, some during the week, last week. And the primary issue that everybody was dealing with was fear. And I always ask this one question. And this is the question I ask of you. Do you know what the expectancy of your trading system is? Do you know whether over a series of trades, and preferably it's 100 or more, just like in Mastering Probability, since I started the newsletter, we've done about 220 trades or so. We outperform the market out there. I know what the system expectancy is of my trading system. Do you know what the system expectancy of your trading system is? Because if you don't, you need to figure that out. There's an easy way to do it. In fact, if you subscribe to my newsletter service, there's a 90-minute workshop that, in fact, it's included with the workshop if you sign up for that this time around as well. Money management workshop. It all starts with money management. That is the key out there. I teach you how to create and understand the expectancy of your trading system. If you do, you can just simply brush away all that fear. Well, speaking of fear, let's begin the trading session by taking a look at the VIX index. Sometimes referred to as one of the fear indicators out here. What we use it for is one of our trading tools. And the trading tool that we use it for is to understand, is it above or below the 50-day exponential moving average? Well, if we take a look at it right now, it's trading out at 1432. And the 50-day exponential moving average, that's at 1454. Now, each time up here into this level, and we're talking about it's been up here 3 or 4 times, it was up and tested that area. Well, back on September 10th, actually, was when the price moved back below the VIX out there, but it tested it on the following trading session on September 11th, tested it here on September the 18th. So maybe today this is just simply going to go ahead and act as a repellent zone out here. We'll have to be paying attention, because if it gets up over it, we can pull this stock chart back. In fact, if you're watching this on Tiger TV, what you see on the bottom portion of the chart, that's the S&P 500. On the upper portion of the chart, that's the VIX index with the little blue squiggly line. That's your 50-day exponential moving average. You can see the up lines. That is each time that price is below the 50-day exponential moving average. You can see that's where you see some of your bigger gains in the marketplace. Now, price can consolidate, so price can move sideways out here. But where you see the biggest demolition comes when the VIX gets above the 50-day moving average. Don't worry about the fact that it's low. It's at a $14 value. Just simply pay attention to where it is as it relates to the 50-day exponential moving average. In the markets here right now, we've got the Dow is up 37 points. The S&P is down 8. The composite, NASDAQ composite off 14. Russell 2000 is down about 4 points right now. NASDAQ 100 off 7. New York Stock Exchange down 41 points. We certainly are going to be paying attention to the NYSE, and we're going to be paying attention to the net declining issues. Right now, it's only minus 469. Should it get to a minus 1691 at the end of the trading session and the VIX is above the 50-day moving average, my outlook for being bullish will change short term to bearish, meaning on the daily patterns out here. That's all that it'll need to take. Let's go to Bucks County, Pennsylvania, to Janice. Janice, thanks for calling. Thanks for holding. How are you today?
Good, Steve. How are you?
I'm doing just fine. Thanks for asking. Thanks for calling. You wanted to take a look at Great Panther Silver, I believe.
Yes. I was looking at it for a buy.
Okay, and for what time period, what time frame? Tell me what your plans are.
Actually, I was just watching the stock for a while, and I was looking at it for a longer term purchase.
Okay, longer term purchase. So what you want to do here, so right now today you've got, and I think it's a great stock for a long-term purchase out there. And right now you've got gold is trading off about $7, silver down about another, it's only down about a nickel. You want to wait until you can see a reversal inside the silver marketplace itself. But if we take a look at Great Panther, here's what I'm going to suggest that you do. On any stock, in my opinion, that you want to trade that is trading below $1, it provides you with a nice opportunity to buy what I call an unexpiring option. And what you would do is whatever your trading account balance. Now, normally I suggest you risk 1%. In this case here, I'd say you can go ahead and risk a couple of percent. You can go up to 2%. And let's say on a $10,000 account, we'll just use that as the factor out there. If you take $10,000 times 1%, you're at $100, $200 if it's 2%. And then you would just buy that many shares, meaning if it was right now, it's a trade. If you were going to buy today at 93 cents, I'm not suggesting that you do that. You would just take your risk of $200 and you would buy in essence about 100 shares. if your risk is $100, 1%, you would buy about 100 shares since it's trading at 93 cents out there. Any stock that's trading below $1, always has a opportunity to go out of business. And what you want to do is you just simply want to make sure that you protect your assets out there. It's got a nice high volume high on a weekly, on a daily, on a monthly, and that says that at some point in time, this is one of those stocks that would be good to stick in your drawer because it could get up into that $4 to $5 area out here. But that's how I would be trading a Great Panther, as opposed to most other techniques, especially if it's a longer-term trade. That's how I would be taking a look at it. But I would wait for silver to reverse, and we haven't seen that yet. And so you'd want to wait for a signal. Now, if you were to see silver close at about 21.97, assuming that it doesn't go much higher than that, then what you would have is you'd have a hammer candle today. And that hammer candle would be going up against this nice Uncle Ben Bernanke day where silver came off of the lows with some volume in a nice wide-ranging bar out there. And the low of that session was 21.22. So far, we've seen a test of 21.30 out there. But it's not a hammer candle yet. If it were to be a hammer candle, that would be a different story. And then you can start taking a position inside Great Panther. So does that help you out?
Yes, thank you very much.
You betcha. Thanks so much for calling.
Okay, bye-bye now.
Okay. Now, let's go back and take a look at some of the indexes, kind of get a feel for, because Friday was a big down day, mostly a down day inside the Dow. Hard to say with so much activity going on, with being options expiration out there, with 3 new stocks coming into the Dow, 3 exiting the Dow. It was the widest ranging bar on the way down. Right now, and we can also see here, the Dow was in an extreme overbought condition. So the move back on Friday, that certainly took a lot of the air out of that tire to get from overbought to not overbought at all, really. And so it's moved back down into the middle of that range out there. Of course, your best buys come when price moves down, or when the relative strength index moves down towards that 30-ish type level, as it did back here as it was making its low. So now what we're going to be paying attention to, there is a little bit of an open gap inside the Dow. That is from the trading session of the close on Friday, or the high on Friday, September the 13th. That was at 15,380. 97, and the low was at 15,381.36 on Monday. So a little bit of a gap, but tiny gap, a gap nonetheless out there. And it looks like price is really going to pull back and test that gap area, close that gap, even though it's so small that you almost can't really see it out there. It still is a gap, and one that we want to be paying attention to. If we take a look at our retracements here, if we go from the swing point low, which inside the Dow is August 28th, all the way up to the high that was put in on September the 18th, you'll also see that the 0.382, the dead cat bounce, just a normal move, would take you back to about 15,347. So if price pulls back into that area, close back above, so let's say it gets to 15,350 or so, 15,347, doesn't really matter. That's really just a range. The number I give you, 15,347, it doesn't have to hit that in order for it to have done the 0.382 retracement, because we're just using it as a guideline range, as like a little GPS, as a triptych. Now, what we do want to pay attention to is what happens at the 15,380.97 mark. Does the Dow come back, test that area, and hold? That would be important. Then we want to see what else is going on inside the other indexes, so we'll do that when we get back from this break. Right now, we've got the Dow off 28 points, the S&P off about 6. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off about 33 right now. S&P down to 7. I like that William Wallace, that Braveheart movie. Well, I like that little inspirational scene. Why is it? Why is it that one of my other, I got several favorite movies. Probably you do as well. I like the movie Hurricane. If you haven't seen that, it's a true story about Reuben Hurricane Carter out there. So there's some inspirational aspects about, how one can live their life out there. In any event, I see some chatter in the Dan about China and whether or not you can believe China was out with their PMI numbers, whether or not you can believe, what China is telling you. For that matter, folks, I'm a by business trade in my early years when I went to when I was going to college. What I did with my 4 years is I graduated with a business degree in accounting. By the time I was 21, I was a CPA. So I'm a bean counter. And Jay just hit it right on the button. All you really have to do is believe the charts. And that's really the key. The key is paying attention to the charts. Because of being a bean counter, both for a publicly held company as well as my own individual companies out there, I understand the tools and the tricks. Look, we all have tricks of the trade out there. Bean counters have them too. They're kind of like maybe a gray area out there, and just simply there's ways that you're able to justify things when it comes to auditors out there. The reality is what you always want to believe is what are the other traders telling you, because no matter how good a company might be doing, take Apple. They'd sold 9 million phones or so. I That sounds like that's pretty good to me. I'd like to have a product where I sold $9 million over the course of a weekend out there. So they're doing pretty good, but it is believing the charts. It's not getting married to the actual product or the CEO, the management team. It's really what, because if you do, you can get, you can be in love with them all that you want. The reality is, it's the other shareholders and what they're doing that don't give a dang, and they can trample you over. So what you want to do is you do want to go ahead and believe the charts out there. You want to understand different trading patterns, different divergence patterns that are out there to help you understand. You want to be, but you want to really take a look at the candle signals out there. So during the next break, during the next segment, we'll take a look at some of that. Right now, I just want to go through the markets here and what they'll be doing. Let's take a look at what they might be doing. Let's take a look at the New York Stock Exchange. I mentioned earlier we want to pay attention to this specifically. So far, it looks very good from a bullish standpoint. Only 391 net declining issues. And what we can see here is that the New York Stock Exchange is coming back into this gap. This gap is very important. Now, the gap is the gap above the May 22nd level. That was at, looks like 96.95 and a little bit of change out there. So last week on September the 16th, we saw a gap up above that. That's very important. Looks like price is going to come back and test that. It's also going to be testing the May 22nd level. That's going to be important. If we see the New York Stock Exchange get back below May 22nd, I suspect we'll also see the McClellan oscillator dip below zero, and that would be bearish. That would suggest that the bears have taken control of the marketplace. Otherwise, it's just simply coming back into a nice buying opportunity out there. So we want to be paying attention to the New York Stock Exchange. If we switch over and take a look at the S&P 500, we're going to see, in essence, the same thing out here. We're going to see price coming into this wide-ranging bar from Uncle Ben Day. That was on Wednesday, September the 18th, the low of which is 1700.35. Right now you're at 1702, so it's going to get down there. It's going to test that. If we take a look at retracement levels, I suspect that what we'll see is we'll actually see the S&P get down to about the 1690 range. It's about another 12 points down below, and at 1690 it's going to run right into that nice rising price channel off of the November lows and give you a 0.382, give you a dead cat bounce out there. So that looks like the area where the S&P could travel down to. If we take a look at the Russell 2000, Russell 2000 looks still pretty strong out here, still traveling with inside the body of September the 18th. So this is not really backed off much. The key area to be watching inside the Russell is going to be the August 5th high. That is at 1063.52. If it closes back underneath that area, then that starts to get back into the lower part of its range out here. Otherwise, a test of 1063.52 and a move back above it becomes a nice buying opportunity inside of the Russell. If we take a look at the NDX 100, so the Russell still looks strong. The NDX looks even stronger than that. You can see here, this has just really been traveling sideways for the last three trading sessions. This here wants to make an A to B equal CD and take itself up to about the 33.77 range. It is just really working off a overbought condition by moving sideways in the market. If we take a look at the composite itself, the market is not going to dip lower, it's not going to move lower, not going to move significantly lower without the NASDAQ and the NDX 100 joining along in the game. And at this stage here, that is not what has taken place. Yeah, prices moved back into the rising price channel out here, but that's not a big deal. It was never really a breakout because price was already rising anyways. 877-927-6648. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 39. S&P is down 7. Let's go out to Dearborn, Michigan, to Ernie. Ernie, thanks for calling. Thanks for holding. How are you this morning?
I'm fine, thank you. You wanted to look at the Sarepta Therapeutics, SRPT.
Yes.
It's in a wild phase, and I guess my basic question is very simple. Is when you get into this wildness, sometimes it's very hard to project a peak point.
Okay.
And that's what I'm kind of basically calling for, because it can move so quickly here, And
it has. Are you in this?
Yeah.
And is it a longer-term investment that you're making?
Basically, yes, but again, it's like anything else. If one day a stock's 20, next day it's 40, all of a sudden you got to think about it,
Well, the good news is the stock was one day 20, and now it's at 46 out there.
Yeah, it was, yeah.
So it has had, it had that really nice day, that big strong session back in October of 2012. So
right,
have you been in this for a while, or?
Yes, I've been in this for quite a lengthy period of time.
Okay. So, what I'll first do is put and the reason why I was asking Ernie was just to understand, maybe time frames out there to get a feel for what could be going on here. Now, on the weekly chart, which I just simply, because I've been watching Sarepta Therapeutics myself, and on a weekly chart, it gave you a nice little buy signal and its last pullback, this hammer candle from August the 23rd on a weekly chart, and
correct.
it's been been moving up ever since then. Now, it may run into some resistance here because it had that big key reversal session, the trading session, on the weekly chart, which is what the highs in July of 2013 out at 47.35, and so far you've hit that level. You came into it last week with 20 million shares, and the downside was 23 million shares. So I don't know that it has enough volume to bust it out right now. If it did, though, this week, I will say this much, Ernie. If it takes out 47.35, that means closes above 47.35 this week on more than 24 million shares. Just sit tight, because the rocket ship has just got some more fuel into it. That's one way to take a look at it. If you've been in it for a while...
Well, excuse me, we just took out the 47.35 with the 47.55 just a couple of minutes ago.
Well, what I'm talking about is a close above 47.35.
Okay, I got you.
Yeah. So a close above 47. Now, the key here, the reason why I use that is because, number one, it was a reversal. It was a reversal area both on the daily and on the weekly chart. And what you like to do is you like to see where the battle between the bulls and the bears are. So this is what's referred to as an evening star. These three candles out here, and it's very bearish, especially with that wide-ranging bar and volume, because that was volume off of the highs out there on a weekly chart. Now, what held it in its place is this entire group back here, the week of October 5th, 2012. That nice wide-ranging bar and high volume, and where you got the real signal as far as where the bulls want to protect this stock, protect this area, is on that hammer candle session from August 23rd. So the low of 29.71, that's a key low for you. If you were to see a break of 29.71, you're going to want to, then at that stage, your next level of support gets down to about 14.84. So you got to kind of be somewhat careful there.
Yeah, right.
But at this stage, that's not what you're looking at, but it's always good to understand where you've got to be paying attention to. Now, the level of resistance on this is at that high of 47.35. So even if it gets above that, if it closes above that on light volume, and it stays above that, meaning it comes back, tested, and stays above it, then really what it's doing, it's in essence creating its next base out there. Ideally, you would see this close above that level with 24 million shares. That would give you more confidence that this thing wants to move higher. That's on the weekly chart out there. On the monthly chart, let me see. On the monthly chart out here, this thing here, what you would then want to see is your next level is a close above the swing point on the month of February of 2006, which is 55.20. So this could easily get up to 55.20. Now, you don't have really a reversal out there.
Right.
It's just the next swing point. So it could get up to that 55.20 level and then kind of cool off and back off. But it looks like a heck of a nice trade.
Well, that's why I'm saying, it's so hectic in here sometimes that by the time you think about something, it's up or down $5, $6, $7, And, the 40 to 50% of the stock is short. And that's what, made this thing jump Friday and again today.
Oh, was it? Okay, so there's a high short interest in here?
Very, very high, yeah, 40 to 50%.
I'll tell you what, then you're in this thing from a long term. If we take a look at the candles, we just trust the charts out here, then I like that because that's a short squeeze, baby. Then that'll go ahead and drive prices up. But just simply chart pattern, just take a look at where the candlesticks are. It looks to me like you're in good shape on this. I've been watching this. I wanted to actually buy this, and I fell asleep with the switch. I didn't notice the hammer candle on the weekly chart.
Yeah, right.
Yeah, that was a good signal. That hammer candle on the weekly chart was really an excellent.
That was on the 19th of August, I believe.
What's that?
Well, that was on the 19th of August?
Well, that was on the weekly chart. So that was
the weekly. Okay.
And the weekly is stronger than the daily. So it was the week of August 23rd out there. That's a nice candle coming back into a breakout area on some light volume. That was the key right there. I missed that. Thanks for pointing out the fact that I missed that, by the way.
Okay. Go Red Wings.
You betcha. Go Wings. Hey, thanks so much, Ernie.
Bye.
Okay. Have a great day. Folks, speaking of candle signals and just being able to really trust the market out there, to me that is the whole difference in understanding strategy versus tactics. So, what we're taking a look at here, both when I was speaking with Ernie, really about both strategy and tactics. I love this picture out here. I want to again say thank you to Bob in California. He sent this to me last week. We're just trying to find some way to be able to fit it in. This happens to be this is the Kiwi versus the U.S. boat out there. What a great shot, man. Wouldn't you have loved to have been there as that was happening? But the U.S. lives again. They'll be racing today. But it is key when we take a look at the different tools that each of us can use inside the marketplace. Most of them are just simply tactics. And the whole key that I have learned is being able to, and I learned this the hard way, is that you really want to be able to take those tactics and turn them into trading strategies. A great book out there by Sun Tzu, The Art of War. I love what he says about strategy and tactics. He says strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat out there. So you want to make sure that you understand the difference between tactics and strategies. For me, tactics are really about 20% of the overall trade. It's about understanding the psychology. It's about understanding the actual strategy behind whatever indicators it might be that you're using, whether they're candlesticks or whether they're different bands or whether they're A, B, C, D patterns, whatever those tactical, mechanical things that you use out there. It's really all about the psychology, and that really means understanding your trading system, because all wealth that you're trying to create, it really begins in your mind out there. Each of us have 6 human needs. We all have 6 human needs, the same ones. 4 of them are primary human needs, and that becomes certainty, uncertainty, significance, and love and connection out there. Now, when it comes to trading, most people won't trade the markets because they think that there's so much uncertainty out there. Actually, heard in Ernie's voice, he mentioned, I think he might have even mentioned the word uncertainty out there. I think that I know this. When you have a strategy and you go ahead and you make sure that you are using stops in place because you understand what your strategy is, that's where you get emotional certainty, and that's what you really need to be able to do. That's a decision, folks. That is not a reward out there. The most damaging emotion that is out there, because all of our needs are just nothing more than emotional needs out there. The most damaging need is regret. Fears are nothing more than a state of mind. That's what Napoleon Hill once said. I love that statement out there because it really is just a state of mind. Your state of mind, it's really controlled by 2 things out there. It's controlled by your blueprint in life, and the reality is most of us have blueprints that were just simply created from the time between we were born and the time that we were 8 years old. Now, how many of you out there actually believe that what we learned between the time of when we were born to 8 years old was enough to be able to create our blueprints in life? Not too many. Now, some of us have the ability to rewire our systems out there. All of us should have the ability to rewire our systems out there. But when it comes to being able to control your mind out there, it's really about 2 things. Your blueprint, which just simply, means some people, I'd ask people out there, I've done this before. Sometimes when I just meet someone or they're struggling with their trading or something, I'll ask them, do you consider yourself to be a lucky person? And it's always interesting to hear the comment. What I find is even people that might be struggling with something, the people who answer the question that, yes, they consider themselves to be lucky, those are folks that are going to do with whatever circumstance, whatever life throws at them, they're going to go ahead and use it. You're going to use it because they're going to ask the question, what good can I do with this? What good is in this? Even if you get thrown a curveball out there. To change your physiology, that's an easy thing. You can do it in a heartbeat. All you have to do is actually just, put your shoulders back, stand up, move around or what have you. That'll change your state of mind. So if you're ever depressed, if you ever see someone that's depressed, I can promise you one thing. They're looking down. They're not looking up. So if you got a baby, a grandkid, somebody that's crying, you want to try this, just have them look up in the air. Just stop them if you're outside, even if you're in the house or what have you. Watch what happens. Just ask them to look up in the air. There are certain things that you have to do with your muscle group in order to be happy. And there are certain things that you've got to do in order to be sad and depressed. Sad and depressed people are not looking up in the air. And happy people, they're not really looking down at the ground out there. So just try that little technique out there. That's how you change your physiology. But what's really important, folks, and what I just did with Ernie, and we took a look at a stock chart. Jay said in the den, just trade the charts out there. What's really important is understanding that each day in the markets that the bulls and the bears are showing up for work. Our mission is to identify who is winning the battle and where the battlegrounds are. And that is the whole key out here. If you don't understand candlestick charting out there, if you don't understand what's behind each of these candles, you are likely going to make a wrong decision. And you don't want to do that because candlesticks measure the emotion of the markets. The bulls and the bears cannot hide. I learned this the hard way, but boy, once I learned this, this became part of the strategy to all of the tactics that I used out there. This is not covered in books. This is not covered in all of the great trading books out there. Don't cover this stuff. And even the great psychology books out there, they don't cover this stuff. You know, what I do, and then really what I'm going to be doing on Friday, is putting all that together. To me, the most empowering thing, I talked about the Braveheart aspect. If you want to inspire somebody, you need to be inspired. If you want to touch someone, you must be touched. That's just simply the way that it works out there. So if you're trying to inspire someone and you're not inspired about what you're trying to inspire them about, guess what? That's not gonna happen out there. But I can tell you I'm very passionate about this belief system that I know many folks will just sit on the fence, say know that they should do. Doing what you know and knowing what you do, knowing what to do are two different things out there. But if we just try to read the message of the markets, this is just a blank chart out here. It's a real chart. I'll tell you what it is at the maybe after I get through it here. But let's just assume, let's not worry so much about the down leg out here, but let's just try to read the message of the market. So here I just flipped to the very next candle. Is this a buying opportunity? Look, what I can tell you is that right up in here, there was a buying pattern out here. There was also another buying pattern that occurred right here on this trading session. And maybe you can see my cursor. Maybe you can't see it that well. But what you want to do is you want to make sure, as you understand where the bulls and the bears are. Now, in that candle right there, that's a bullish engulfing candle. There was also a bullish engulfing candle right here. This green candle that was out here. This one right here, this small one was also a bullish engulfing candle. Would you buy this one right here? Or would this just be telling you that, guess what? The bulls, just like when we took a look at a hammer candle on the weekly chart for Sarepta Therapeutics, that was important to understand what was going on inside the markets. There's always a message. How about in the next trading session out here inside this chart? Just a move sideways. Is that bearish? Does that mean that you should get out? Does that mean that you should buy? No, there's not enough information there. How about on this candle? Because the market was actually moving lower, this too is a bullish engulfing candle out there. So now we can really see the bulls are at work defending this low out here. That's very important. And also you've now closed above this little, what we'll call somewhat of a wide-ranging down bar out here. That is really changing the psychology of the markets. This is where you can go ahead and put on a trade. But you can only put on a trade if you actually use a stop. If you do not use stops out there, what you're going to do is, just simply take a look at $100. If you have $100 and you lose 50 of it, and you're down $50, you're down 50%, how much money do you have to make on your next set of trades in order to get back to break even? You've got to make 100%. You've got to now take your $50 and make that work twice as hard just to get to break even. And all that would have been because you didn't use a stop in place. You're not going to give some trade that you get into a 50% stop, or you most certainly shouldn't be giving it a 50% stop out there. Use stops. All that you can have wide stops. You always are dealing with what is your risk out there, and then it's a mathematical, it's a bean counter calculation. All that you're really doing then is just saying, here's how much I'm going to risk, $100, and here's what my stop is. It's $2. That means I'm going to go ahead and I'm going to buy 50 shares. It's a mathematical game. That's all this is in making money in these markets. It's a mathematical game, and it's understanding where the bulls and the bears are hanging out inside the markets out here. As these little red candles were being formed, they were just indications of where the bears were trying to take positions, but they weren't reasons to actually get out of the market. Even as this market here made a 100% move, it wasn't a signal to get out. You want to use the candlesticks. They're your friends. The patterns, they are also your friends. What you want to have, folks, is you want to have strategies in place in order to be able to trade these markets. I'm going to teach you all the strategies that I possibly can. These are all great strategies. They will work. You'll be able to use them on your own trading system as well. Go ahead. If you're just sitting on the fence, just go sign up for the Master Trader Series. Even if you can't be there on Friday, it'll be archived on your workshop. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 52 right now. S&P is off about 10. Let's go check in on the ETF, see what we've got going on out here. Let's start off with the SPYs. Right now, the SPYs at about 169.80. We've had volume so far. We've been trading for about an hour and a half. So we've got volume of 31 million shares out there. So that's going to, got to take that, divide by 1.5 times 6. So 30... Oh, I'd be horrible on that math, even with being a bean counter. But what we're taking a look at is coming back into the break. Well, 30 million shares times about, what's that, about 4, so about 120 million maybe or so out there. That's after making a nice high with 203 million on September the 18th. Looks like the SPYs here are going to come back and both test the gap So come out here and close the gap from September 13th. The top of that gap, 169.46, 72 million shares. So it's coming in there a little bit hot. So that says that what we should see the SPYs do is get back now and test that May 22nd high. That's got volume of 243 million shares. If it tests that level and rejects it, that would be bullish out there. If it gets back inside the May 22nd area, that's going to have to make us say, something to think about. That actually would go ahead and bring back into play the rising price channel out here inside of the SPYs. If we take a look at retracements from low to high out here, the 0.618 retracement level is 167.08. So if it can break back inside of May 22nd, that means close below 169.07. I would say that's going to bring into play the 167.08 level inside the SPY. If we go take a look at the IWM, the Russell 2000 ETF right now on its pullback here looks much better than the SPY. So far, volume-wise, though, 10 million shares. Heck, that's going against the 46 million shares. So it's about a similar type volume day as the Uncle Ben Bernanke breakout session. The low there of 105.26. So the area that's going to be tested is the B point, the August 5th high, which is 105.63. But so far, the volume on the pullback here inside the Russell 2000, that does not look too bad as of an hour and a half into the trading session. If we take a look here at the Qs, see what the Qs are doing. Of course, Apple had gapped up about $30 here at the open. Apple is up about 19 right now, up about 4%. If we take a look here at the volume inside the Qs so far today, about 12 million shares made a move higher on September 18th, last Wednesday, with 31 million shares. So the Qs have got a little bit of volume as they are pulling back into that little breakout session out here, but still not a ton of damage done inside the Qs or the IWM. Inside the Dow diamonds out here, the diamonds are at a price level of 153.48. Volume-wise so far today, 3.6 million shares after making a high with 9.6. So that's a little troublesome with the volume. You know, the big volume on Friday, we could say that was somewhat to do with options expiration, futures expiration, three stocks moving in and out of the Dow. That had volume of 9 million shares, but so far today, 3.6 million shares in the first hour and a half of trading. There's some, the Dow is back to being the weak link out here. So what does that set up? Because it has most certainly closed the gap. I would have to say that sets up coming back and revisiting perhaps the rising price channel out here. You can see it has most certainly worked off its overbought condition out here, but it's got quite a ways to run before it gets back into oversold level. So the volume so far, as we speak this morning, that is a bit too much. Now, what we're going to pay attention to, you're going to pay attention to net declining issues. Remember, that number 1691 or greater. We're only at 696. And you're going to pay attention to the VIX out there. The VIX closes above the 50-day exponential moving average, which is 1455. It's at 1457 right now. That's got to make us say, something to think about. Stay tuned, folks. Basil Chapman is up next. Have a great Monday. I look forward to seeing you tomorrow morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.